Stocks dead even right now on the S&P 500. 1 basis point up right now. NASDAQ's been flirting with positive territory all day. Kevin Green taking us into the close here for the last 30 minutes. KG, hope or despair?
There's a little bit of hope that we could probably grind this out another, 10 points or even 20 points to the upside going into the close. I'm looking at between 56.20 and 56.30. And that just kind of depends on, once again, if we see aggressive buying activity. Early on, we saw a lot of aggressive call buying, and that actually led us to the upside and kind of coincided with this, power move when you're looking at the 5-minute chart. And then we kind of have a little bit of a topping pattern. You can even call it a lopsided head and shoulders pattern, where we did actually technically break the neckline, but if you extend that neckline out, it crosses to around 5,600. We could leverage that as an area of support as we try to break higher here. But if you're looking for a melt up, I would say 56.20, 56.30 to the upside. There is some pen risk at 5,600. I would not be surprised if we actually do close there. In any fundamental breakdown, you just had to really defend 55.80, and we actually got fairly close to that, about 6 points away, and then we started seeing some buyers kind of stepping in. So overall, this is actually a pretty decent market, even though we faded some of these gains that I think maybe was just maybe some intraday churn when it came to speculative positioning. If we are able to actually close here, I think it would be more of a win for the bulls for now, because bears were not able to kind of break us down and get us back to those lows that we saw earlier this session.
So yesterday's bounce looking pretty decent off the lows, even with some of the month end, quarter end stuff going on. At least we didn't fade that down immediately. I feel like that's kind of a success, number one. The intraday chart, not terribly inspiring, but it does seem like we're trying to maybe make one last push here. All of this with, of course, the tariff deadline kind of 24, 48 hours ahead of us, roughly. Do you think that limits upside, or could we get some big moves?
We could have a range-bound day tomorrow just based on that, because the announcement's going to happen at around 4 p.m. Eastern time, so right at market close. What I do find very interesting, though, Oliver, you are hearing some news reports regarding these tariffs. I think the Washington Post stating it's going to be around 20% of that weighted average, if you will. And if we are starting to get a little bit more, news reports kind of giving us better clarity, maybe the market's already going to kind of test the waters here. And it may be a non-event, or maybe not as surprising now if President Trump comes out and makes some commentary that this is just the beginning and it can get higher from here. When you look at tariffs, you probably could see maybe a little bit of vol spiking. But I think the equity market's trying to price this already in. And if you're kind of looking at the chart as far as today's candle, you would like to see a nice little push to the upside. Getting as close as you can to that 20-day moving average would be key. It would be a key area of resistance, but the closer you can get there today, I think would be a win for us. In the event that we do actually have a vol crush type of event, it probably would not be tomorrow. It probably would be the day after. And the day after, if you actually look at the at-the-money premiums, it's pricing in around a 2.1 to 2.2% move to the upside or downside for the S&P 500. So the market is pricing in some type of volatility. We don't know what the direction is, but just based on today's price action, looks like we're trying to hold up.
Okay. Volatility coming in on the margin, maybe. It seems like today, vol dipping. John and I were talking about how this nasty little 2-day drop from Friday to Monday still didn't drive VIX back up to recent highs, and vol VVIX still notably lower. So I guess that's marginally encouraging.
It is, yeah. If you kind of look at if you look at a ratio between the VVIX and VIX right now, you're looking at around a 2.5-year, almost 3-year low between that ratio. And that usually coincides with potential bottoming or a start of an actual down cycle or a bear cycle. So until the price action kind of tells us otherwise, I think that would be something that gives bulls a little bit more confidence that maybe we have a re-rating of volatility does crush. And then we do get a little bit of a melt up to the upside here. And you can actually look at, positioning just itself. If we're looking at a calendar of at the money S&P 500 going out 2 days, buying that long, and then shorting tomorrow's expiration, it actually is fairly cheap and a decent way to at least try to reduce premiums as well as getting some upside exposure here. But the backwardation is still in effect right now. So this is basically just showing you that SPX options on the wings when you're looking at the put skew as well as the call skew, but most of this is actually put side driven, meaning a lot of these hedges or concerns within the market. Once that actually kind of crushes, then it'll better align with VVIX, and VVIX is the one that's really not showing any type of meaningful pressure to the upside based on this event alone.
So VVIX is the encouraging one. We just need to get VIX and vol to properly move alongside with it. I would think John's point about the tariff stuff starting to get priced in, I would think that, we've got our head around it, but who knows? There's always room for surprise. But if there's no shocker, I guess tomorrow, what are your main, to your point though, at the end of the day as well? So 24 to 48 hours. Seems like we watch VIX as an important indicator. Gold today took a little bit of a step back. I wonder if maybe, on the margin, just tiny little bits of, risk appetite possibly. But what do you watch? What are your top three to look for in the next 48 hours, KG?
I'm still going to be looking at the 10-year, 3-month spread there. I don't like the fact that it's pretty much it's inverted. And I don't think it's inverted just because of tariff risk. So hopefully we get the tariff policy side of this whole thing behind us. That could crush vol a little bit. And we start working on the hard data. And I think the updated GDP now forecast for the Atlanta Fed, even if you take into account the gold import exports, we're still printing a negative level. A negative number when it comes to Q1 GDP, and actually continues to get worse. And so the hard data probably will be the major focus for us moving forward here. And we'll also have the jobs report. So tariff policy definitely is going to be on the radar. But I think the hard numbers are still a main focus here, and something that I don't believe the market is fully priced in as of yet, but we'll see. Sometimes when we take risk off, like tariffs, you can have an accelerant move to the upside, and the market could discount the hard data even if it does come in soft. Who knows?
Okay. VIX, if things go well, if the market is prepared for this, what do you think is possible if we do get a crush in vol from here into the weekend?
That's a good question. I mean, if you got into the weekend at a 16.5 or even 17 VIX, I think that would be a win, especially for intraday traders. Success. You don't want to have a
17, right?
Yeah, I would say 16.5 to 17 VIX gives you enough volatility for intraday traders to still see some really nice price action. You don't want to get into a 14 VIX type of environment, because you'll start talking about 10-point, 15-point ranges, and those aren't any fun. So 16.5 is usually kind of like that right level to be able to still go long calls, go long puts, still receive some pretty decent premiums if you're selling spreads in either direction. So that would be the ultimate win here.
Like that. Yeah, take us back to normal. 16, 17. No need to go to 11. I'm not asking for that, right? We don't. Let's keep having fun. Let's get the two-way trade still happening. Appreciate it, KG. Thanks.